guys, how are you doing everybody? This is Capital FX. Today I want to share with you guys a very accurate strategy I'm using to trade boom and crash, because I found out that some people, most of the newbies, are finding it very difficult to trade boom and crash, and even Verde 75. But I come up with this strategy for boom and crash today. So watch this video to the end to understand this agro strategy I'm going to explain now with you guys. So stay tuned guys, and if you are new to this channel, please kindly like and subscribe to this channel. So thank you, let's go there. So guys, I am right here in my chart. So I decided to use class 300 to explain the strategy. Actually I am on this trade. I think I entered this trade right here. I found this breakout here and I entered the trade. Let me try to put it on the screen. You can see. You can see where I entered the trade right here, and this is my profit. I just made a few hours ago after entering the trade. You can see it's a live account guys. We are not doing any demo here. It's a live account, and yeah, this is it. I'm just trying to build this account to, let's say, $150, $200. I'm just trying to challenge myself on a small account to see if I can build the account. So let's go to this strategy. So if you are trading boom and crash, so the first thing you should have in mind is that boom and crash is useful of going in the direction of chart pattern. Yes, it used to go in the direction of chart pattern, and chart pattern is very important in trading. Chart pattern, I mean something like this, something like this. This is M formation, and something like this. This is a head and shoulder, and we have also something like this, which we call our rising wedge, because it used to rise, and after there will be a breakout from here and it will come down. So this is one of they're calling this one reversal. They're calling this one reversal pattern. So if you see anything like this in the chart, this particular one, so they are calling it a reversal, LVS. So they are calling it reversal. So whenever you see something like this in your chart, you should immediately know that it is your rising wedge. And we have also a falling wedge. We have falling wedge like this. This is the opposite of rising wedge, like this. Like this, it will be going down, and down. And after you've spot this kind of candle pattern in your chart, what you need to do is to put your resistance line here and put your support line here, and be waiting for reversal. The reversal will go like this, So this is how we trade boom and crash. It's very important guys. It's very easy, and it happens most of the time in boom and crash. So, and we have a lot of them guys. We have the bell bottom, or you can call it a W formation, which is this one, and we have also our flag. We can call it body's rectangle, but I used to call it flag, like this. So after you put your line like this, and be waiting for breakout above here. So this is what we call continuation pattern. This one is in the group of continuation pattern. The reason why they call it continuation pattern is that it will come from down, and after coming from down, it will do something like this, consolidation, and it will shoot up. That is continuation. It will continue the journey. So this is one of the important pattern you need to know in boom and crash. So let's go to our left side and see if we can find some double top or double bottom in the chart. So we can see here we have a double bottom here. You can see we have a double bottom right here, and after this double bottom the market shoot way up. You can see here, you can even call this triple bottom, because we have 1, 2 and 3 and the market shoots up. So this is how we trade boom and crash. You used to go with typically with chart pattern mostly. Sometimes the engulfing or the bearish engulfing, sometimes it works, but the thing that works most is the chart pattern. Just the pattern, guys, just the pattern, as simple as that. So this is number one. The number one is chart pattern, and number two is breakout and retest. So let me show you guys how the breakout and retest used to occur in boom and crash. So breakout and retest, I mean, is something like this. You will come and see something like this. You come and see a channel that is going up like this, like this, like this, like this, like this, like this. So what do you need to do in this situation? So the only thing you need to do here is to put your resistance line here like this, and put your support line here like this. Remember, this line is not very correct, or sometimes you can see it like this in the forex chart or in the trading chart, but it used to come down like this. I just drawing it like this. It used to come down like this. So let me draw it very good so that you will understand what I'm talking about. Like this, like this, like this. It used to have equal touches, both down and top, but sometimes it doesn't touch at equal edges of the line. So you put line like this, and you put line like this. So as a trader, what do you need to do here? So what you need to do here is to be waiting for breakout and retest. So what do I mean by breakout and retest? Breakout and retest works like this. You can do breakout like this, and it will retest like this. It will push back to that same horizontal zone, that same support zone, sorry, and the market will start going down. So this is one of the most important style the boom and crash used to move with. So this pattern is very important, guys. Chart pattern. Just make sure you are trading with the chart pattern, which is double top, head and shoulder, rising wedge, double bottom, bullish rectangle, bearish rectangle, or falling wedge, or rising wedge, symmetrical triangle, descending triangle, or ascending triangle. So any of these, guys, any of these. So this is number two. Number one is chart pattern, and number two is the breakout and retest. So number three is engulfing. Guys, engulfing is very important in boom and crash. Yes, engulfing is very important. It's very important, guys. So we have engulfing right here. So this engulfing was among the thing I saw in the chart that made me to enter that trade I just shown you guys. So I found out that the market has broken out from this zone, has broken out from here, and I saw this weeks, I saw big candle breakout, and I found out that there was a candle that moved back to this zone and retested with a wick, and another candle moved back again and tested. I said, okay, there is no how another candle will start moving up again, so I have to enter the market. So I entered the market here, and the market shoot down from here to here, and the market made a retest here and show me another bearish engulfing. Then I entered another position here and take it down here. So now I'm still expecting the market to reach this zone and touch this zone and go down like this. So that's why I keep on holding the trade. I used to hold trade like 4 days or 5 days, guys. So it depends on the opportunity I find out, or out of my analysis. So it depending on my the trend, the momentum of the trend I saw in the chart, that will enable me to hold the trade for some weeks, sometimes some days. So this is how I trade. So that's why I'm trying to show you guys my strategy, so that you can make money with this. It's not something to hide, guys. I want you guys to make money with me. So that's why I take my time to make some research and find new strategy that I can share with you guys, so that you can make money with me and be a good trader like me, be a consistent trader. So this is number 3, which is the engulfing, both the bearish engulfing and the bullish engulfing. So let's try to look for bullish engulfing. I believe most of you guys must have known what is bullish engulfing. So bullish engulfing can be defined as just a green candle that's closed taller. The bullish engulfing can be defined just like a green candle that closed taller than the previous red candle in your support. It must be in your support. If it's not in your support, it's not gonna work. It's not going to work. So we should be aware of these things. Engulfing is very important, guys. You can see here we have our engulfing here. You can see this is our engulfing. This is bullish engulfing, guys. Bullish engulfing. And you can see here is our support, guys. Is our support. So this is how it works. This is how it works. This is how it works, guys. So this is engulfing and the market shoots up. So we have here, we have bearish engulfing here, and the market shoot down. You can see bearish engulfing. It's very, very simple to find in the chart. So this is number 3. Number 4 is piercing and dark cloud cover. Piercing and dark cloud cover. So what is piercing? So piercing is one of the bullish candlestick, is among the group of bullish candlestick. You can make some research if you don't understand what I mean by piercing, because it's not popular like engulfing and harami or shooting star, all these things. So it's useful of this candlestick, and I've used this many times, and I found out that it is working, and it has already given me massive results. So engulfing, piercing and dark cloud. So piercing is a bullish candle, while dark cloud is a bearish candle. So what is piercing? So piercing is a green candle that closed half or more than half of the previous red candle in your support. It's not engulfing. It's not like this. It's not like this one. So let's try to find piercing or dark cloud here, so that you can understand what I'm talking about. So the candle must close more than half of the previous red candle in your support. Yes, I got it. So this is how it looks like. This is it. This is it, guys. You can see that this green candle closed more than half of the red candle, and the market shoot up. So this is what we mean by piercing, guys. This is what we mean by piercing. So let's go ahead and look for dark cloud cover. So dark cloud cover is opposite of piercing. Is a red candle that closed more than 50% or closed 50%. It must be more than 50%. That is more than half of the previous candle, or half of it. Once it closes more than half of it, that is your dark cloud cover. So let's go on the chart and try to find our dark cloud cover. Let's go on our chart and try to find any candle that closed more than half of the previous candle. So let's see. Okay, it's here. Let's try to find it out. So we are looking for our dark cloud cover, guys. Yes, I got it. So this is it. So this is how it used to look like. this is it. You can see that this candle did not engulf this candle. It didn't engulf it, but it closed more than half of the previous green candle. So this is what we know as our dark cloud cover. This is what we know as our dark cloud cover, and this is our piercing. You can see piercing here. You can see we have piercing here, and the market shoot up, and at the above of the market gave us dark cloud cover. After that cloud cover, the market started selling massively until here. This market sold for about 1 week, guys, and I guess I could remember I took this advantage. This market sold for like 1 week or 10 days. So this is what I mean by dark cloud. This is dark cloud, guys. Dark cloud. Let me see this correct spelling. And this is piercing. Piercing. I don't know if I got the spelling correct. Piercing. So this is piercing, and this is dark cloud. This is care. This is dark cloud cover. Dark cloud cover. So you can still make another research on your own to find out more about these candles, because they are very, very important in boom and crash, guys. They are very, very important in boom and crash. So, and I found out that some people don't know about these candles. So some people used to overlook it and keep on waiting for engulfing. So if you keep on waiting for engulfing, sometimes the engulfing does not come out. It's only this one that will come out, and it's a brother to engulfing. It's a brother to bearish engulfing, and which the piercing is a brother to bullish engulfing. So that is how these things works, guys. They are very simple. So this is the number 4, and number 5, which is the last one, is OB. That is order block. I've explained a lot of order block in my previous video, so if you don't know about order block, you can search one of the videos I have in my channel. You can see where I explained very, very clear about order block. So we have two types of order block, which is the bearish order block and the bullish order block. So which is the bearish order block is a bullish candle before the bearish candle that broke the market structure lower. So when the market gets to that area, the market goes down. So but bullish is a bearish candle before the bullish movement that broke the market higher. So let's go to a chart and see if you can see any other block here, so that you can understand what I'm talking about. So these are the very, very important candle patterns that always occur in boom and crash, guys. So I'm trying to find a nice order block that obeys the market. So this is order block, guys. This is it. You can see this is the typical example of bullish order block. You can see bullish order block can be defined as a bullish candle before the bearish candle that broke the market structure lower. You can see, so if you put your line here, you will see that the market rejected this zone in the line of the bullish candle by your left. Before this long red candle, the market rejected that same size, that same scale of the previous green candle. The market rejected it and go down. Remember, this is 1 hour time frame. So if you put your sell limit here and take this position and pick only this red candle, you will be in profit. So this is how they look like, and this is another example of bearish order block. You can see mostly the market used to obey order block at the tip of the previous candle, not the red candle, because what is judging and what is oppressing the power of the order block is the previous candle, not the red candle. Is the previous green candle by your left. You can see that same level of the previous green candle. The market respected the order block and the market sold massively. The market sold massively from here. The market sold massively from here until here. this is about 4 days selling. You can see because of here, this one came up here and rejected and go down. So this is typical example of bearish order block. So let's go ahead and look for if you can see any bullish order block in our chart, so that you can understand clearly what I am talking about. So let's look for clear bullish order block. So let's check. We have our bullish order block here. You can see how they look like. This is the opposite of bearish order block. So let me put my line and see if I have any connection. Yes, we have a connection. So if you take this line here and put here, so the strategy I usually use to catch the order block is pending orders. Like this one here, I will put, if it is boom, because I don't sell crash, sorry, so because I don't sell I don't buy crash, I only sell crash. So if this is boom, so what I will do is that I will put my line here. I will put my line because I already know that the market, the order block is not always coming down to make double bottom. This is a very, very important note. We should hear it and hear it clear. It's not always coming down to make equal lows. No, it's not always coming back to make equal lows. So what is useful of doing is to stop at the tip of the previous red candle. So you can see the market respected this line and the market reached here, the market came here and shoot up. So this is how the order block works. This is the power of order block. So once the market gets to that zone at the tip of the previous candle, the market rejects and shoot up, and the market came back again and broke out again and still rejected again before breaking through the market. Because if you put your line here, you can see that we have a very, very strong downtrend here. You can see we have a very, very strong downtrend here. That's why the market retested twice and break out here and retest here and come down again. So this is the important strategy I'm telling you about, and that is the last strategy I have for you guys today. So if you find this video very interesting and very useful, please kindly like and subscribe to this channel and put on the notification bell so that whenever I post a new content, you will get notified and make use of it and make profit like me. So thank you guys, stay good and don't give up. Capital FX. Thank you and have a nice day.